Home buying made simple. Why is it simple?
Because we use common sense. Oh, shave it off already. No. Alright. Hey guys, George Rivera here and Brian Duckworth. We're the Bearded Brokers for Simple Lending Mortgage, an independent mortgage broker serving Florida and Georgia. And this is our Hump Day update. Guess what day it is? Hump Day!
Good morning, my good people of Florida and Georgia. All right, so in these Hump Day updates, all right, we're going to be hitting 3 key points every week. So first thing, we're always going to talk about the rate updates. So we're going to go over what the rates did last week. We're going to go over what we think we're going to see the rates are going to do this week. All right, this week we are also going to be talking about discount points. What are they, what they mean, how lenders are using them today. And we're also going to be talking about some misleading marketing flyers that we've been seeing in and around the surrounding market.
So we're going to go ahead and start it with today's rates. I'm going to go ahead and share your screen because obviously sharing is caring. The repricing risk for today, it's moderate. Right now, the bonds were taking a big loss due to overnight trading because of the UK inflation coming in at double digits again. That pressures their bond market since Bank of England will need to aggressively raise rates. So that trickles over to our markets, and now our rate sheets are going to look terrible. So thank you again, England. Although it's okay to cautiously float to start the day, we're looking at possibly having to lock by day's end. So again, whether you're working with us or not, we want to provide useful information as far as the rate market so you can act upon it and protect yourself, protect your loan, and protect your rates.
Talk about discount points today. All right, first off, what is a discount point? A discount point is an upfront fee to lower your interest rate throughout the life of your loan. Each point is 1% of that loan amount. So for example, a $300,000 loan, each discount point is going to cost $3,000. All right, so discount points are beneficial if you plan on holding on to this loan throughout the entire life of the loan, meaning you have no interest in selling the house before the 30 years are up, or you have no interest in refinancing during that period. That can definitely benefit you, paying an upfront fee. All right, how lenders are using discount points today is typically to hide their higher interest rate. So you'll see a lot of things about advertisements for a 5.75% interest rate. All right, that is the qualifying rate that they're giving you. And we oftentimes even see these as qualifying rate when they send out estimates or fee sheets. All right, that is not necessarily the interest rate that you're going to be borrowing at. Or if you are borrowing at that interest rate, it can come with heavy discount points. All right. How you can combat this is you can ask for a loan estimate or a fee sheet. That's going to give you a breakdown of the different fees associated with that loan. So you can see on there the number of discount points you're being charged. All right. Now also be careful on this too. Some people like to hide it with different verbiage. All right. Just like qualifying interest rate. That is not your par rate. That is what they are qualifying you at. Some of the names that we see for these: origination fees, rate finding fees, or rate access fees. There's plenty of other ones. Sometimes they even break it up into different names so it doesn't look like one massive discount points. So make sure that you're asking for those loan estimates and for those fee sheets so you can see how many discount points you're being charged. All right, I do want to take a minute to talk about an example that I received this week from a different mortgage company. She had been structured an FHA loan at, we're going to call her Jane Doe, at 20% down. All right, first off, I don't see how this makes sense to structure FHA at 20% down because per FHA guidelines, you still need to have mortgage insurance for the first 7 years of that loan. Whereas conventional, if you went conventional, yes, it would be a higher rate, but you would actually be paying less in monthly payment. So it's good to compare 2 different options and have it all broken down so you can see the difference between the two. In this case, she could have saved over $11,000 in closing costs and had the same payment that she would have had before, or she could have saved $6,000 to $7,000 and she could have had $200 less in monthly payment. All right, so big idea to keep that in mind. You're
I
gonna have
want to just add to this real quick. You know, what's really interesting is when you're bringing this case. I remember when you called me and you were going over this client that was rate shopping and what she was facing with the other lender. I knew that you instantly, you know, obviously called it. And when we look at how they were structuring, what gets me is the creative structuring of this loan. How, in order to present a lower rate in today's market, they structure the FHA loan, but taking her money that would equate and benefit her significantly more had she gone conventional. But the purpose of this structuring wasn't necessarily to save her money or have the loan benefit her. It was structured this way only so that they could win in her rate shopping. You know, and when you bring this up about the terms, you know, I think everybody does a good job at letting customers know now what discount points are, but banks are wising up because now it's just taking, well, fine, we're just going to call it something else. So that way, when you're rate shopping, you're getting a lower rate at a lower discount point, but the added verbiage, it's so misleading in today's market. I'm really glad that you had these scenarios because I didn't even know what else is out there.
Yes, absolutely. So in today's market, it pays to be an informed buyer. So if you don't understand what you're looking at, by all means, send it over. We offer a second opinion service, hassle free. If you're getting a better deal, I'll tell you you're getting a better deal and that you should definitely accept that loan program. If you're not, I'll explain exactly where the misleading information was so you can make the most informed decision for yourself.
Awesome. This has been George and Brian, the bearded brokers of Simple Lending Mortgage on a Hump Day update. Till next time.